Wednesday, November 7th, market analysis, Stan Ehrlich. As usual, I start out with the stock market indexes, giving you my opinion on where it's going to go, how long it's going to take, and how far it's going to go, based on my technical analysis techniques. Some candlesticks, some oscillator, and chart formations, and technical analysis in general. So here we are on the spider, the S&P 500. No, I'm looking at the Qs. I'm sorry. Let's go to the spider for the first chart. I talked on Tuesday of last week about how the market was approaching a likely price level to stop rallying and turn around and come down. It's on the recording. On the 1st of December, which was Thursday of last week, we hit the major bear trend line, the resistance levels, the closure of an old gap, almost overbought conditions, and the top of an upward slanting wedge. Other reasons as well, and how this is a very likely place for the price to stop rallying. It did. It turned down to a slightly lower close on Thursday of last week, and Friday, another slightly lower close after opening a lot lower and then coming back some. But it was Monday of this week that we made lower lows for a couple of days and lower closes by a chunk. And also yesterday, getting all the way down to the bottom of the 3-week trading range that we have established. And now support has held so far this morning. We are close to the lows of the day, not quite. But if it breaks below 392, 391 area, and stays below especially 390, we should see the beginning of the next sharp break, maybe 10 to 20 points in just a few days. That's exactly what I'm forecasting and expecting. I hope I'm right. If the support level holds, and it could, then a rally back up to about 400 to 402 wouldn't change my long-term opinion any, but it could provide a great new short selling opportunity. I just don't think it's going to happen. I think last Thursday was the day, and if you didn't do it then, I don't think you're going to get the chance to do it again. In the next few weeks, we should be going down significantly. I wouldn't be surprised if the 370s were broken and we were in the 360s just before Christmas. Remember, the Santa Claus rally is traditionally buying, in a very broad sense, just before Christmas and selling out of your long positions in the first few days of January. We, my partner and I, Jim, have isolated the Santa Claus rally to buying 3 days, 2 days, 1 day, trading days before Christmas, and I will be telling you what time of day also in the days to come. And selling out of that position, you're in 1/3, 1/3, 1/3 again. 3 days, the first 3 days of January, and 1/3 the first trading day of January, the second trading day of January, the second, third, and the last portion, the third trading day of January. Now, there are ways to take more money out of the market as opposed to just selling out those 3 days. But again, I'll go into details later. A little bit of a hook. I'm sorry. I want you to listen more. Now, we broke the trend line at the bottom of the wedge yesterday, stayed below it quite a bit. We are approaching another group of support levels, which are around the 390 level, maybe a point or two above, a point below. So I really want to get well below 90, frankly, 390, in order to have that free fall. In other words, to get down to 380 pretty quickly. And even lower, I would not be surprised. Please remember, bear markets fall much faster than bull markets go up. I want to make sure I am sharing the right screen. And I am. That's very good. Okay. Now, let's look at DIA for a moment. Commentary is very similar. Oh, by the way, this is the 1-minute chart on the spider. Yeah, and we're coming down toward the support for today, which is at 90.30, 392.30, excuse me, 392.30. Below that, you've only got 2 minutes worth of trading range, and it stopped at 91.98, 97, something like that, a couple ticks below 392, 75 cents away. And if we get below 92, I think we're going to start sliding much faster, much more quickly. And I do expect that to happen. All right. I think my data feed has stopped, but that's okay. I'm just a little bit late, a few minutes. Let's go to the QQQs. Same commentary. I'm looking for the market to drop off to make lower lows and break down in a new low ground completely. We're close. Let's look at some commodities. Futures contracts. I usually start with wheat. If you see a red bar, it's the ER signal, sell signal. If you see a green bar, it's an ER buy signal. I don't see any green on this particular chart at the moment. And not all of them are going to be the exact high of a rally or the bottom of the break, but a lot will be the very top or bottom of a very significant rally or break, maybe for many months. Wheat, we caught the top of the market to the day, and that was way back in March. Next, cocoa. Recent rally high, red. The system caught the high day. Caught a few days with a rally here on green, nothing particularly great or profound. This was cocoa. Next, 10-year notes. Got a buy signal back on September 28th for a few days with a rally, nothing great. And we've caught the top of a big, big rally way back on August 2nd, the beginning of a huge decline. Super great sell signal. Next, bond futures. We have a super great sell signal again back in August 2nd on the 30-year long bond, the top of that big rally, the bottom of which, the very beginning to the day, we bought on June 16th. The bottom of this rally, which wasn't that big, it was only a few days, we caught. That was not a good buy signal. That was a small loss. That was a small loss also. This was a small loss, that buy signal. This was okay. It rallied for a few days. There was some money there and nothing since. I'm hoping to get a sell signal very soon. We are overbought now and prime territory for a bearish engulfing, which would give me my ER red sell signal, hopefully as good as that one was August 2nd. Next, we've got the low so far on coffee. We have a new low for a week and a half or something today. No danger of being a bad signal yet, but I'd rather not see today's low be as low as it is. I'm hoping it'll turn right back up again and follow through. This buy signal worked very nicely for over a week. Plenty of room for profit potential there. And that was coffee. Next, we caught the top of the whole screen here for a whole year in platinum, the high day. We also caught the beginning of a very big decline on November 16th of 21. Almost at the bottom, September 7th, green, a minor top to the day, a minor top almost to the day, minor top almost to the day. Right now, I'm fairly neutral, a little friendly, trend is up. Next, green on the bottom, that's what we love. Buy signal 928 on a low day for a month or two earlier, and since on high-grade copper. We also caught the top of this year on the screen. Actually, this is 2 years almost. The high day, and that was March 7th, 22. This was high-grade copper. Next, on natural gas, we caught the top August 23rd. What can I say? That's the way this is built on purpose. We also had a head and shoulder. That's the shoulder high. We caught the head of the formation. That's the shoulder high on the right. It looks fairly symmetrical. That's normal. A little buy signal before the last shoulder high. The neckline was broken and tested, and straight down we went. Actually, darn good formation. Next, and that was natural gas. Nothing recently. A couple of good sell signals here and an excellent buy signal way back December 15th of 21, the bottom, before a multi-month big rally. That was bean oil, soybean oil. Next, this is corn. Today, we have a bullish engulfing green ER buy signal. Obviously, I'm expecting this to be the beginning of a rally, the first day up. Again, they don't always work the way I like. This looked like a great buy signal. It went up very little, not very much, for a couple of weeks. And I can't really say that that was a really great buy signal. It really wasn't. That's corn. Next, soybeans themselves. Nothing great here recently. Sell signal, it didn't really work. Sell signal didn't really work. We got a rally high here. That was okay. Nothing spectacular. On soybeans, next chart. Sugar. Almost the top. Headed south. Bounced a little. Still bearish, looking for lower levels. That was pretty good. This was a sell signal that produced 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row of lower closes every single day, 9 days in a row after that red ER sell signal. And we got that top on April 13th. This is sugar. Past performance is not indicative of future results, and hypothetical returns have some inherent limitations. Standard disclaimer, I don't have to say that, or shouldn't have to say that, but I did, and it's in writing. Next. Great sell signal on the high there. Pretty good one there. A bad buy signal. Good sell signal. A bad sell signal. And right now, we're getting close to being overbought, not quite, and we are back up to potentially a double top. I have to wait and see if that thing starts to turn back down again. No particular opinion for the moment, but I would be watching OJ for a potential double top. OJ. We got almost the top there. We did get the high day for months before and months afterwards in heating oil. Great. Live cattle. Good sell signal. Great sell signal before it gapped down the next day. Good buy signal. Opinion at the moment, fairly neutral. The E-mini, S&P, it's an index as well as a futures contract. So October 13th, without saying, we had a tremendous number of buy signals on that date in stocks, indexes in particular, and a variety of other kind of markets as well. That's the E-mini. Crude oil. Got the top back in June 1st. Got an okay, not great sell signal in October. We are new low and last today for several months, and obviously turning the trend down. It's been down for a while, but we're a little oversold now, and so we're probably going to drop off a little more, day or two, and then bounce a little higher than we are at the moment in a few days. These are 3 sell signals that clustered within about a week's time period, smack dab at the top of that big move. Caught the high. Next, gold. 2 days ago, sell signal. I would consider selling short. My protective buy stop would be 1827-ish. We're currently 1801 or 2. We caught the bottom back in September 28th. We caught another bottom to the day, July 21. A couple of great ones this year, buys. This one could turn into being a great sell signal. I don't know yet. Too early. Next. Silver. Is this silver? Yeah. Sell signal 2 days ago. And this is hogs. buy signal a few days ago. I'm going to leave you with hogs. Miss Piggy. They make great pets, little pigs, I heard. We also have a great sell signal on March 31st, as well as the top of the whole chart on February 23rd. And that's the top for about a year and a third. Thanks very much. Stan Ehrlich. Have a great trading day. See you tomorrow.